Hello, this is Cryptolyze. I hope you are well on this Friday, October 6th, 2023. We're meeting today to talk about ETH, Ethereum's crypto. As usual, we will dissect it into two parts. A fundamental part, we are going to come back to what Ethereum is, to its news, because there are still a lot of things about Ethereum that are happening. We have to prepare for all that, and then we will project ourselves on medium long-term prices for purchase prices, sales, and it starts right away. What is Ethereum? So Ethereum is a level 1 blockchain. It is really an infrastructure blockchain which aims in principle to provide developers with tools to be able to build decentralized applications. So even to go further, and this is the shift they have been having for a year, they are also making available to other developers, other blockchains, solutions for instantiating scaling solutions on Ethereum. Generally what we call layers 2. And Ethereum, it's difficult not to talk about it when we talk about crypto, because it's what really made it possible to have the notion of smart contract as we know it today. They are the ones who revolutionized this part. They are the ones who invented Solidity, which is the language which allows you to execute smart contracts, to design smart contracts. Smart contracts is what allows you to define actions for each transaction. Overall, it is what allows you, when you are on a decentralized exchange, to be able to make an exchange. It is what allows you on this decentralized exchange to be able to do lending, to be able to deposit in a pool of liquidity, to be able to take out insurance if you wish, or to do what we are currently doing, for example, on Real IT, to be able to buy a tokenized piece of an apartment and receive rent. All this is done through smart contracts. It's thanks to Ethereum. And we're going to go even further, because Ethereum isn't just that. It's them who invented NFTs. It's them who invented soul-bound tokens. It's them who actually invented the notion of programmability. Instantiated in the blockchain. Blockchain would not be what it is today if there was no Ethereum and if there is no Ethereum. It still remains the leading blockchain in terms of TVL, total value lock, therefore in terms of money that is blocked in the protocol. And this is also why Ethereum is dominant and in fact dominates the market. This is because it really simply dominates the innovations. It is they who in fact carry the innovations, the structural innovations. And currently the notion of account abstraction, for example, which exists in other technologies, will be brought to Ethereum. And Ethereum is preparing for the future on other elements and other areas of development. And to know that it is complicated to develop on a blockchain which already exists with so much liquidity and so many existing protocols. And despite that, they managed to achieve feats like last year, September 15, 2022, where we had the merge, which was the transition to proof of stake of a blockchain that was in proof of work without discontinuity and without problems. And on that, it led to quite a few effective modifications in which we find ourselves with a max supply, which is no longer inflationary, but which is deflationary. So to be exactly precise, it is still inflationary. But we'll have a burn mechanism which allows ethers to be destroyed according to the transaction fees which are offered by the network. So a large part of the transaction costs which are burned so much that the protocol itself can go into deflationary phases, as we have seen at the beginning of 2023, the end of 2022, and the beginning of 2023. And there we see that we are rather in a stationary phase because we have relatively little use of the protocol. And it is completely logical in that we absolutely want to have a use of the protocol to be deflationary. And this is the principle of ultrasound money and the very principle of Ethereum, where overall the more it is used, the more we will find ourselves in something which will be deflationary with a maximum supply, which is currently around 120 million ETR, which will continue to go down little by little. And besides, when we look a little at the impact of the merge, we see that it is impressive in which we had 22% of ethers locked. Therefore, 22% of the max supply, finally of the totality ethers that are available, have been locked and are currently locked to protect the network in a form of stacking. We see that Lido decentralization is decreasing a little in favor of other protocols that are arriving, which is rather logical. And above all, we are seeing an increase in deposits. The fact of having had the update, which allows withdrawals to be made, especially favoring deposits in which people continue to deposit, because they know that they are able to withdraw their ethers whenever they wish, and some way in which they wish, and therefore it greatly simplifies the protocol. And that's why we are still in an interesting period for Ethereum, in the sense that we have the increase in locked ethers. We continue to have a form of burning, which is taking place on the ethers, and we have a protocol which is being developed and in which we will have new updates which will arrive during 2024. So first quarter 2024, normally it has been postponed, but it should. First quarter, let's say second quarter 2024, if ever there is a problem in which we will have the possibility of being able to favor layers 2 through a reduction in the structural costs of layers 2. Because currently it is relatively expensive to write on Ethereum because layers 2, rollups in particular, which condense a certain number of transactions into a single transaction, will take up a lot of space. While we do not need to have all the places carried out on the main blockchain, we will be able to instantiate this data elsewhere to be able to reduce costs. Overall, making a transaction on Arbitrum costs you between 80 cents and $1 if you pay your fees well, and on that we would fall around 3 cents, 2 cents, 1 cent, or even less than 1 cent in function of the volumetry and the saturation that we could have at the level of the terms. So this would allow for enormous scalability to increase the flow of transactions and ultimately favor Ethereum. And once again, we remind you that Ethereum's goal is to increase transactions on the main network. To increase transactions on the main network, there are no 36 solutions. It must be more affordable in the scaling solutions to be able to increase the capacity of Ethereum and the scalability of Ethereum through these layers too. We have finished in the fundamental part. We are going to attack the technical part in which we have a beautiful Elliotist diagram which is ended. With wave 1, wave 2, wave 3, 4, 5, 5 finished in November 2021 and early November 2021, in which then we had a classic ABC retracement with the establishment of a BCAR distribution ST. So weekend distribution, if you don't know, it's very simple. A little research on the internet or on the Discord, which is in the description, in which you have the buying climax, the automatic rally, the secondary test, and then we dive into the sign of weakness, which is a classic diagram which brings behind an uptrust, a UT, to get a new AT8th, which is rather normal in this type of diagram. And so there we are really in the sign of weakness, which is this part of accumulation of week off, and this sign of weakness, which is really very strong at Ethereum, which was mainly driven by the merge with this big acceleration on the previous summer, the summer of 2022, in which we then had a very strong retracement and then a second acceleration for this beginning of 2023. And we see that since the beginning of 2023, we is in something that manages to hold together rather well, in which we do not have. Broken here the 1,300, but we broke here the 1,600. And it's important to note this because even if we are in progress, we have a big candle in which we have a reacceleration. We retested the upper part. We did a retest, but we still have here something which is a little bit weaker than BTC and which is at the same time normal because we did not have a construction like BTC, which was much lower regarding 2022. Before having acceleration on 2023, we already had Ethereum, which was over accelerating, while BTC was more or less a form of consolidation at that time. So we are behind an underperformance now of Ethereum compared to BTC to be able to restore a balance between the two, and which is at the same time normal because Ethereum, to be able to function, to be able to truly have its overvaluation, we must have traffic, we must have continuous use of Ethereum, even if it is the network which is currently used the most. That does not prevent us from still seeing a drop in the usage rate, which is symptomatic of an end to the bear market, and which is symptomatic of an area of lethargy. And precisely, this is also reflected in the prices in which we have a huge ranging which is present between 2,000 and overall 1,000, in which we will certainly oscillate. So here we are heading towards a classic retracement of the 618 in the 1,500, and then I think we will have a bullish structure to retest a little higher in the 1,900. But we are currently in an interesting zone for exposure to Ethereum if you are interested in this. Active. For what? Because we could plan for long-term developments. Already we could consider that we are in a big wave 1, big wave 2, and therefore behind that we are preparing the big wave 3 to seek an objective here of 1.618 with an Ethereum in the area of $8,000 to $9,000. So big performances await, and we will already have a first important point, which will be the 3.6, in which we will certainly have a lot of people who will come out. Because when we look at Nansen, we see that the people who are stacked are around $2,000. So that is to say that we still have a majority who are potentially between 1,000 and 1,500. And so this also implies that we will have some of the people who will take profits with an X2, therefore, who will lock in part of the profits that we risk having. Here, a relatively strong retracement before being able to start rising again, which will be classic in a bull run term. And obviously the projections that we have are projections on the advent of a bull run, a return of utilities, and behind a bullish acceleration. And I even think that we could aim for an Ethereum, which would be much higher, For what? Because for me, Ethereum will find itself in a deflationary dynamic, in a bull run in which we will have a lot of transactions. So that means behind a lot of ethers, which will be burner to arrive in a max supply, which should be around 100 billion, which is a bit my target, in which we will have a concentration value. And we could very well look for targets at 2,618, for example, in $13,500, which would be entirely logical in an upward acceleration and in a dynamic where we would enter a form of flipping between Ethereum and BTC, namely that we currently have a whole wave of construction around BTC, but it will take a lot of time to be able to build the equivalent of Ethereum on Bitcoin. And I think that in any case, Ethereum will always have its place against Bitcoin because these are two protocols which are separate, two separate vocations and two separate utilities. And for me, it is really two things which will in fact be complementary. I hope you like this video. If so, I am sure that you will love the one I did on AVAX, Avalanche's crypto. I'll put the link there and we'll see you tomorrow for the weekly at 13:30.